Good afternoon, everybody, and welcome to the latest Urban Living webinar. Today, we are going to be meeting some investors and talking to them about the sentiment to a wide range of hospitality and living asset classes. My name's George Sell. I'm Editor-in-Chief at International Hospitality Media. We are a publisher of B2B sites for the hospitality and travel sectors, and we also organise conferences and awards. And we are actually launching a new website this week, more of which later. So this webinar series is sponsored by Flywire, which is a payment solution company. And we're just going to watch a short video to find out a little more about them.
Flywire helps travel businesses reduce costs and improve guest experience when collecting payments. Without Flywire, travel payments can be costly and inefficient, requiring the business to work with multiple vendors like payment processors, merchant banks, and more. The process results in difficult manual reconciliation, high fees on both sides of the transaction, and no dedicated support for payers or merchants. We solve these pain points through our Flywire Advantage, the combination of our next-gen payment platform, our proprietary global payment network, and our travel-specific software backed by our deep industry expertise to improve both sides of the payment equation. Guests pay in their local currency and with their preferred payment method, whether it be credit card, local bank transfer, mobile wallets, or other local payment methods. Flywire leverages our significant scale to ensure travel businesses and guests alike enjoy low fees and competitive exchange rates. Businesses receive the exact amount that they bill in the currency of their choice for both domestic and international payments, all reconciled to the penny. If there are any questions along the way, Flywire's around-the-clock multilingual support and dedicated account managers are there to help. To learn more, visit travel.flywire.com and request a demo today.
Okay, so thanks to Flywire for sponsoring. If you'd like to find out more about them, you can go to the links that have just been posted in the chat. And this webinar is also sponsored by Charles Hope, which is a UK service department operator. Charles Hope offers standard lease options, management contracts, and hybrid models to suit every level of investor and developer. And you can see their contact details also in the chat. So drop them a line if you're interested in finding out more. So today's webinar is going to last an hour. We'd like to make it as interactive as possible. So if you've got any questions for our panelists, please use the Q&A function or the chat function in Zoom, and we'll try to get around to asking as many of them as we can. Most of them will be at the end, but we may dip into them as we're going along. Everybody who's registered for the session will be sent the link to a recording in a couple of days' time. So I just wanted to show some context slides. These are a few news stories that we've run on our new website, urbanliving.news, which is launching this week. And these are just some good examples of the types of investments and the asset classes that we're going to be talking about today. So here you can see a couple of build-to-rent projects and also some co-living. And on the next slide, some senior living stories and PBSA, student accommodation, which is another topic that we'll get onto shortly. So let's ask our panelists to introduce themselves before we crack on with the chat. Mariya, welcome to you. Would you like to introduce yourself first?
Of course, thanks for having me here, George. It's a pleasure to be here. I work at NREP, which stands for Nordic Real Estate Partners, and it's the largest multi-asset investment manager and developer in the Nordics, founded in 2005. We have around 17 billion of assets under management at the moment, and we're just over 500 people across 8 countries, I believe. I'm personally based in London. I'm responsible for pan-European expansion beyond the Nordics in our living, care, and office asset classes. So looking at at many different types of transactions when we enter new markets, but we can chat a bit more about that later.
Sure, thanks, Mariya. And Pavlos, good afternoon to you.
Good afternoon, George. So I'm Pavlos Gennimatas. I'm heading up the European Living team at Hines. What we do is we are acting as internal advisors, and we are coordinating the platform in any investment or development project in Europe with the aim to transfer knowledge internally, add value through the product definition, and strengthen the alignment from investment development to operations with our in-house operating platform. We invest in the sector and to the subsectors across the whole risk spectrum. But what we have been mostly doing in the last years is focusing on developing our own product. It has been already quite a journey in the last 3.5 years. Our gross development value under control has grown for about 10 billion. So this includes not only build to rent, but definitely student serviced apartments and other subsectors that we will speak later about.
Thanks, Pavlos. You can see the LinkedIn profiles of both Mariya and Pavlos in the chat, so if you'd like to connect with them, please go ahead. So I'd like to start by talking about what's happened in the last couple of years. Obviously, it's been an enormous upheaval across all the sectors. Pavlos, I'd just be interested to know whether the pandemic and other geopolitical concerns have affected your investment strategies in the short, medium and long term.
The pandemic, I mean, the word change includes many things. We were initially discussing about the pandemic accelerating some existing trends. Then we were discussing about the evolution of the sector, a change, I would call it too much or too strong. Definitely the flight for quality exists. Definitely there is more need for open space, green space, outdoor space. We have seen in every type of crisis that the home ownership ratio has been declining, and this was one of the accelerating trends, which also indicates that the resi for rent or living sector for rent will gain more market share. In terms of product types, of course, we have been looking more and more into hybrid solutions, but in terms of what the pandemic brought was higher demand for residential for rent sector in one phrase.
Mm-hmm. Mariya, would you agree with that? Does that broadly chime with what you're doing?
Absolutely. I think obviously there are certain trends. Maybe one that Pavlos didn't mention is around sustainability that has been ongoing for the last maybe 10 years or so, but in the last 2 years really accelerated by COVID. In addition to that, across Europe at least, there is a significant undersupply of rental stock, housing crisis and affordability crisis, for which obviously rental product tends to be a solution. So for sure, across the spectrum from student housing all the way through to senior housing, and each of those sectors is driven by slightly different trends, but across the whole segments we see quite a good supply demand imbalance, and we have continued, and we've been doing that prior to pandemic, focusing mainly on logistics and living, and we continue to do so, and even put even more emphasis on living, which will probably form about 50% of our investment volume going forward.
Mm-hmm. Thanks, Mariya. We'll move on to talk about specific asset classes shortly, but Pavlos, you mentioned that you've got quite a big focus on developing your own product. How has that been affected by rising materials prices, energy prices, recruitment issues? Everything is getting more expensive, basically. Does that deter you from having such a large proportion of product that you're developing yourselves?
It is one of the challenges. that the sector has, and I believe every sector has, with inflation and rising costs. On the other hand, what we have seen in the living sector is a very strong yield compression the last 3 years consecutively. We've seen yield compression. On the positive side, the inflation brings some rental growth. So all of it will come down to land prices and affordability, which was always the case in any living project. It always comes down to affordability. So the exercise is how to do an attractive product through efficient design, through defining what are the spaces that are really needed and utilized in order to come up with the answer in this environment with rising costs.
Mm-hmm. Mariya, are you thinking of expanding your focus into new asset classes as a result of what you've seen over the last couple of years, or are you keeping more or less on the same course that you were originally?
So just going back to the costs and what Pavlos also just mentioned, I think the key focus, yes, yields has been compressing over the last few years, and a lot of investors who traditionally were investing in traditional build-to-rent PRS product have moved into so-called alternative living models because of the higher yields, with the view of yield compression and maybe the slightly lower regulation in some cases for rental uplifts, etc., but other types of regulatory issues and planning issues. But that's probably going to come to an end given the interest rate environment we're entering. So it's extremely difficult to assume yield compression going forward, or probably people should start thinking about underwriting actually yield expansion going forward, because it will happen sooner or later given interest rate hikes. So then the challenge with that and increasing construction costs is how do you make your returns with development? And I think the answer is really around the, as Pavlos said, rental growth and an initial rent that you set in precedence. And obviously, in order to do that, you need to focus on locations where rents are relatively affordable, whether it's locations or countries or cities, because there is the affordability question, of course, and how far can you go with that, and not also create a bad reputation for yourself, because that becomes very quickly quite a political debate and topic. So I guess to your earlier question as well, we have been quite progressively thinking about trends and how we address those trends through operating platforms. So we've probably pioneered quite a lot of different concepts. So it's hard for me to say that we're moving into new sectors because we were already in those sectors. So we have a fully vertically integrated platforms in student housing, co-living, build-to-rent, intergenerational living, senior housing and care. So I think it's hard to imagine what else could we do. I guess we're not really moving into proper hotels, but co-living part of it is a short stay model. So we see that as a hospitality-based concept. We think that attracts a particular customer. It creates a sense of community, and people tend to pay more and be a bit less cost conscious when it comes to a product that fits exactly their needs and is a higher quality product. So we spend quite a lot of time analyzing trends and sort of customer analysis and even surveys of what kind of product we need. And for example, our intergenerational living concept was done with more than 6,000 people were surveyed and asked, who do they want to live with, actually, those 55 to 75-year-old still active seniors. And the initial concept was with other seniors where they create the same community. But in fact, the survey came back and said that given that they're still active, they want to have young people around them. So that's where the intergenerational living concept came about. And it's not much different than a traditional build-to-rent product where you have multiple generations living under the same roof. I think the idea is the more carefully curated and selected community, and it tends to be in locations that are not your typical build-to-rent locations. So they're lower quality locations where you can get cheaper land, but they're still well connected to city centers. So because of that community, you're able to attract those customers outside of their usual zone of where they're looking for a rental product.
Great stuff. Okay, well, let's dive a bit deeper into some of the asset classes. And as we've started on later living and multi-generational living, could you tell us a bit more about the typical age mix of one of those developments?
I guess, yeah, I mean, just starting with, I'll move on to Pavlos, because I know that they also have quite a lot of senior living products, and it's a slightly different model maybe in other countries like Italy, but at least what we have in the Nordics, which is the only place that we currently have those concepts, is essentially intergenerational living, has no care model. It's essentially a 55 to 65, 70-year-old. About 1/3 of that is couples of those ages. 1/3 is families with children, and the other third actually is single parents. So that was one of the unusual categories of people who needed that help and appreciated that support from the different generations, whether it's for childcare, whether it's for communal cooking. So that's how a typical community of this concept, which is called Plushusen, looks like. We also have pure senior housing, which is 65-plus-year-olds, still no care on site, but specifically focusing on this smaller segment of seniors that actually want to live with other seniors only. And that's very much focused on building it sustainably. It's called Agora. It's in partnership with a developer we invested in called Tetris that had a wooden modular concept. So this is a very specific, architecturally speaking, product that we have. And we also invest in the Nordics. Social infrastructure is quite well established. So invest in care homes where we don't actually operate the care homes, but we have very good partnership agreements with local authorities and private operators that run those care homes, and we develop it for them and own it. We are, as we are entering new markets where that makes sense, we are considering also assisted living, which is essentially senior housing with some sort of care element on site or off site, and especially relevant in some markets like Germany, for example.
Right, so thanks, Mariya. Pavlos, I know you're looking at a lot of senior living projects at the moment. How do the projects you're involved with differ, if at all, from the ones Mariya's been describing?
We have recently started our journey in senior, and the approach is the same as we did for student housing. We want to spend enough time to define the product. I fully agree with everything Mariya said. This social demographic is a little bit different, given one, there are much more renters by choice, and secondly, versus what we've seen in student, for example, exactly as Mariya described, they need to be in less isolation within their own group, and to bring them into mixed living schemes and with multi-generational target groups. The geographies create definitely differences from cultural perception of the sector. South Europe is much stronger on home ownership, and the more we're going up to the age curve, the home ownership ratio is stronger. So this product definition needs to be very, very attractive. I would also say that in locations, it doesn't need to be in places that the land is definitely cheaper, but it has different elements on what we need by vibrant neighborhood, or what are the neighborhood amenities and what are the neighborhood desired amenities for this target group. We're definitely assessing as part of the large scale projects that we have in Europe. We haven't done any, but I'm sure that soon we will be discussing about our first senior living project. And I also agree with Mariya on how you have the different segments in terms of age restrictions or assisted living or partnership with some healthcare providers, which I don't feel that this should be what our in-house operate platform would do about offering healthcare.
I completely agree. We've avoided having healthcare professionals as part of our teams. So we would go as far as signing some sort of a service agreement with a care operator, but we haven't even done that yet. But we are potentially going to embark that journey. Senior housing is a very, very, very local market. Even if you look at Germany, each federal state has its own regulations, because of the different ways that the healthcare systems work and what people can recharge. Some people can recharge house support and sort of food support. Some people can only recharge rent to sort of when it becomes a proper social infrastructure with care model. Then in addition to the cultural differences, there are quite significant care regulations. You might have different planning permissions. In the UK, senior living is not always classified as a care property. It depends on how much care you provide on site and what kind of conditions can you treat and what level of care one needs. So it becomes really quite interesting in some cases as well, because, for example, again, in the UK, you can avoid having social housing component by being classified as a care provider, even though in fact you resemble more of a living conditions and product type. So your downside is not the same as a care home, for example. So I think it creates quite an interesting dynamic, similarly to co-living, where you have the same dynamic between hotel and living, and what you can do there.
Yeah. Let's move on to co-living and talk about that, because I think in common with senior living, it has some issues around perception and understanding amongst planning departments. We've seen, for example, in Ireland, a complete moratorium on new co-living planning permissions. Here in the UK and Liverpool, the planners have said that co-living developments have to meet residential planning laws, which means certain space standards, which makes the short stay model pretty much unviable. Across Europe, Mariya, are you seeing serious growth in co-living, and is this an important sector for you?
It is. We have a co-living platform, which is probably the platform we're looking to grow at speed, because it is a very much an international concept that's more easily applicable from a product standpoint than maybe from regulatory and how you play the planning game, for lack of a better word. But it's called Nordic Living, and it started out of Finland as a hotel concept. So it's a hotel use class, but only about 20% of the revenue is actually short let. So the rest is a long let, which we'll define as more than 9 months. And then we're translating that into Denmark, actually, as a residential product. We're also entering Poland with Noli. So that's probably our most international platform at the moment, and we're seriously considering Germany and Benelux. So for example, in Germany, actually co-living, even though it's not really labeled, there's co-living, and one can have a very hard time defining what is co-living. But in Germany, they call it micro apartments. And there are no space standards in Germany. So you can build as small as you want the room. So now it becomes more about what kind of price are you going to charge for that room, given that for most cases in Germany, it's very straightforward, no shared amenities. It's much more about having a slightly lower total rent than anything else. And then it's a game of what is it per square meter and what kind of density can you get, which is not the type of product we aim for. I guess our product is somewhat more similar to where the collective was, so it has a bit more shared amenities and focus on community than, let's say, the German traditional micro apartments model. In the UK, I think it's the most challenging country when it comes to planning regulations because there are none. It's basically on a case-by-case basis. You go and try your luck with the local authorities and try to sell them the story of why this is good for their local community and why those smaller rooms are not actually making the living conditions worse. And the community aspect is important. I think the collective, despite its failure, mainly probably because of I'd say financing, difficulty in financing and typical real estate developer issues, then as operating model, I think their operating assets are doing pretty well. Of course, COVID just made things worse, but as a developer and the conversations they've had with planning authorities, I think they've been quite successful in progressing the sector and the space. And so sadly, the UK will always have this kind of one-off conversations with planners, and until they create, I guess, a use class that classifies that beyond just calling it too generous or hotel or living, and having a more rigid maybe zoning plans like many other European countries, I think the UK will remain quite challenging. But that's why it has been indeed an interesting space, because it is one of the only segments that can deliver potentially higher returns, exactly because of this planning uncertainty. So if you're comfortable with your value proposition and the conversations you can have with planners, you can definitely use that. Because, for example, later living in the UK, for the most part, it's a for sale model, and it's an event fee model, which is difficult from I guess it's a difficult model for an institutional investor to understand.
Yeah. I think actually some of the co-living projects in the UK do have a fair proportion of 55 plus residents there. It's quite an attractive model to them as well. Pavlos, tell us where you're at with co-living, and maybe you could answer the first question that's come in from Matthew Lesniak. Thanks for your question, Matthew. He asks, what do you think the social, environmental and economic impact or value of co-living is compared to other resi or specialist assets?
First of all, the environmental impact, I think, is a little bit independent of the model. And I would start with how Mariya started about the definition of co-living. And I think there were a lot of roundtable discussions about defining what co-living is. And the latest trend is that co-living, student housing is co-living, senior housing is co-living, because there are different aspects of have different target tenants, but of the same model. So if we define co-living as a high density offering with flexible leases and highly amenitized product at the same time, I think we can see a lot of different aspects of what co-living is, and then we can start discussing: is highly amenitized with larger units? Do we need to have small units? Yes, but we typically do not have the flexible leases. So it is definitely a dynamic part. We haven't done co-living because it feels that there is so much demand for, and I will come to the question of the social impact. Mm-hmm. There's so much demand for high quality product, amenitized residential product, that it feels that co-living is much more niche than the typical build to rent. And then student housing sector is part of co-living, and yes, we have strong conviction, and it's clear the demand. Same I believe applies for senior. Now, if we blend these and we name this co-living, or if we have much more flexibility on leases, yes, this is definitely attractive. In terms of social impact, there are two elements. One is the affordability. Is co-living something that classifies as affordable? Definitely not. But there's always a positive domino effect when you're satisfying a specific demographic. And I'm not referring to young professionals. We just mentioned that singles or recent divorcees are a big target for co-living. There's always this domino that satisfies demand, so brings better quality of life in the cities, and and more dynamic lifestyles. In terms of build to rent, again, we have the affordable housing that many times is part of the provisions, and in mostly what we're doing in terms of development, what we're trying to do. And we had an example in Germany, in Berlin, the project called Südkreuz. What we did was we didn't isolate the affordable housing as a different part of the development. It was part of the full scheme of the free market. They were using the same amenities and they were using the same building. This is definitely a strong part of the social impact. Other parts is offering open spaces to the city, to the community. It doesn't need to be looking only inwards to our tenants, but we can look outwards to the cities. We can discuss about other elements about how can we serve specific groups that have specific needs, and how through housing we can again serve the communities and the cities. I feel overall the living sector has much more room in order to have strong ESG credentials. And Mariya added earlier what changed during COVID, and that ESG came up in the agenda. I really feel that ESG was part of Hines' DNA well before ESG acronym was created. And what we did change is that now we do have a dedicated team run by Peter Epping globally and Daniel Chang in Europe, who were the leaders of the Core Fund, which was the leader in GRESB for the last 4 or 5 years. And I see you, Mariya, smiling because you know this story very well. So of course, ESG has intensified. The living sector has more opportunities because we're talking about people living there, and it's not only about affordability, which is a strong element, but how you really serve the tenants in the cities.
Yeah. Okay.
Fully agreed with Pavlos, and I think indeed living is quite exciting because you have this direct B2C connection rather than a lease of 15 years. So I think we're moving maybe into a similar model in other asset classes like serviced office. Retail even is becoming quite a lot more, because of its disruption, quite a bit more challenging. And I guess you need to think more about the customer and the community and how different tenants relate to each other. And I think that's where the true social impact comes into play. And so I just want to give an example of Nordhaven, which is where our office is in Copenhagen. And we created the retail strategy for that part of Copenhagen, which is in the northern part, a little bit used to be less established. Now actually have the highest capital values achieved in Copenhagen residential. So the strategy there for retail was that you cannot have a lease if you have any other location of your concept. So it's completely original startup entrepreneurs, and it created quite a unique community. So having that impact of, on one hand, supporting SMEs and supporting entrepreneurs, and on the other hand, actually you end up creating a more interesting community, and with that it attracts people. So I think that's a great example of what other asset classes could do. Co-living and build to rent, whether co-living has a bit of more impact than build to rent. I think it has a little bit more because it is more involved operationally. So for example, in build to rent, you tend to have your own bills, and in co-living, you could control that, create some sort of, I don't know, games of people, how much electricity they've used or water they've used, and sort of monitor that a bit more and have a bit more control of how you source your electricity, etc. And same goes with maybe community events, and it's a bit more operationally heavy, so you can have the community have a bit of more impact than build to rent, where it's a bit more individualistic at the end of the day, even if you have some amenities. So in that sense, yes, you can have a bit more impact. less about affordability. I agree with Pavlos. It is probably more affordable than a comparable location, or at least it has to be. Otherwise, you'd of course go for the larger apartment. When you add all of the services and what that would take you to, you have to have a bit of a discount per square meter. Of course, it's a lot more. So it is still not. I would not classify it as affordable. I think it's affordable for the customers that it's targeting, which is not the same customers that affordable housing, for example, is targeting, and they would not classify for affordable housing. Your co-living is essentially the graduation from student housing. It's when you're not part of a university, you're new to a town, you're a young professional, that's your core customer group. You don't know where you want to live, you want to meet new people. And given the urbanization trends and just Europe being Europe and people moving from one country to another, of course, that has stopped a little bit during COVID. But even then, people needed space. People wanted to go explore, work from somewhere else, and we can start seeing that coming back to life. So there is, as you say, Pavlos, it is more niche, and there is a smaller maybe group of people that it fits. But again, similar to our senior housing concepts, where the majority of active seniors want to live in intergenerational living, some actually do prefer living in only senior community where they don't have a baby screaming next door. So again, it's knowing how much demand and evaluating how much demand there is, so that you don't oversupply. But as long as you're tapping into that demand, I think you can have all of these concepts be successful. But again, that demographic analysis is quite important to do before you go into that kind of product.
Mm-hmm. One of the asset classes that I think has probably changed the most in my lifetime is student accommodation. The places where I lived when I was at university bear very little resemblance to what's available out there now. And in fact, when we were in Paris the other week, we did a tour of the Eclair property, which was amazing. It was huge, and it had all kinds of fantastic amenities, from a music studio complete with instruments, computer gaming rooms, a screening room, and all sorts. It actually did remind me a bit of the Collective properties. It had a similar kind of feel to it. But Pavlos, you mentioned that Hines has been active in PBSA market for quite a long time. How has that changed over the last few years, and what trends are you seeing in that market in terms of product?
This is actually how we started the journey in living. The top-down strategy in living started from the expansion of the existing student housing platform, which was in the UK and Ireland based. Now we are already operating in Italy, and we are ready to operate in Spain with our in-house platform with Apartho. What has changed in the last years is that we tend to say that, and I mentioned this earlier about senior, that the cultural elements are important. What we have seen is that the cultural elements of the younger generations are much more concise. The young people just want it all, and they want it now. And I believe that this is the most demanding asset class. And starting with this, and then you can extrapolate your experience, knowledge, and know-how into other living sectors. This is one thing that has changed. So the perception of it in areas and cities and markets, that it wasn't that consolidated. We have the example of our Milan projects, that we were the first institutional investor and developer in the sector, with Giovenale, that was just completed a few months ago in front of the Bocconi University. The other thing that did change was the perception of the sector as an alternative. So before the pandemic, it was being consolidated, but what happened during that period was we saw the proof of the students wanting to stay far from their homes, and to be more independent, and to be in environments like what we can offer with this type of projects. I think these two elements made the sector much more interesting for institutional capital, and now trying to see how a platform can grow is the only, the only target, and less about, is this the right sector? That it was the discussion maybe 5 or 10 years ago.
You mentioned that students are the most demanding customer group. In what way are they demanding? What do they demand now that maybe other demographics?
I feel and having been close with our operating platform, I feel in one word, it is simplicity in everything. And the simplicity in everything means that it needs to be very well served, organized, and they are much more sensitive in terms of ESG. It's higher in their agendas. They want simplicity, they want convenience. When I say simplicity, it is gross rent, as Mariya was explaining about co-living. They don't want to have on top internet, on top to pay their gym subscription. It's one payment, so everything is gross. And they want to be close to universities. They want to be close to the lifestyle. They want to be having good amount of space to study throughout the year, but at the same time, they want to be easy to have some fun in the same building. They want to share some spaces, but they want to also have some privacy. If we start combining the needs of the students, and of course, technology makes everything, adds one extra layer, or I wouldn't call it complication, but one extra layer of services that we need to offer. And if we combine this with, again, the younger generation's perception of what is human-centric and what services are, it feels that it is the most demanding. And one thing, and this is how I believe student housing started, is we also need to make sure that they're safe, that their parents feel happy. So I think adding all the factors makes it definitely the most complicated, but I fully agree with you. It's very exciting, and every time we're developing or designing a scheme, we're all always saying, it would be nice to go back to university.
Just to go back. That's absolutely what I thought.
Absolutely.
Mariya, what Pavlos is describing in his new generation student properties sounds a lot like how I envisage co-living. So how would you differentiate between your student and your co-living offers?
In fact, I think our co-living offer is more operationally heavy and has more amenities than our student housing product. So unlike maybe some of our competitors, when it comes to student housing, we're currently only in one country with student housing, only in Denmark. It's a brand called UMOS, You, Me, and Us. And it's focused on local domestic students rather than international students. Hence why, for example, we're very hesitant of entering the UK market, where the majority of student housing is very much focused on international students. And for us, that means that it needs to be very affordable. So we see student housing as a much more affordable product, smaller rooms. Then you really pay quite a lot of attention to, for example, what is the layout of the room? Having big floor to ceiling with big windows that creates quite a lot of light is important, because it creates a sense of higher volume in the room. Having your own entrance where it's just literally indented, so you don't feel like you're in a cruise ship with long corridors and many rooms next to each other, again, creates a sense of identity. Also having, as Pavlos mentioned, some things need to be private, some things need to be shared. So having your own bathroom seems to be a very important thing for everybody. But for example, having your own kitchenette, you don't need that necessarily in student housing. In fact, that's where, so having essentially little dorms where the 15 to 20 people share a kitchen is actually quite beneficial, because you create your own little bubble, your own little community. That's where people socialize. Another thing is about cleaning and sort of maintenance. So we've empowered people to feel ownership. Because they're domestic students. They tend to stay longer than, let's say, 1 year. They might sign a couple of years even, rather than, for example, exchange students, which we try to keep to a limited number. So again, the sense of community, that you know your neighbors, and basically we ask them to view that space, that kitchen, as their own space. So they need to take care of it. If something gets broken, they need to replace it. And that way people take care a bit more, versus in a fully serviced co-living project where you know that you're going to have your bed sheets changed, you're going to have cleaning occasionally. It's a completely different mindset, and there are less services that we offer, and it becomes quite a lot about efficiency and how efficiently you can build, so you don't have much leakage, because that's where you keep the affordable rent. And that's where we see the biggest sensitivity in student housing, probably more so than in co-living. Even though they are supported by their parents, a lot of times they want to be independent, and they want to maybe work part-time. There is, again, it might be a bit different from country to country, but for example, in the Nordics, you have the concept of student interns, so they'd work alongside their study continuously. But that's why when we enter a new market, it is quite important to get the cultural aspects right, and the cultural aspects for the target group of people that you're targeting. Because also for student housing, as well as co-living, but maybe less so, because in co-living it's about having your own space, your own studio, your own kitchenette. So it's about privacy and then shared amenities. In student housing, you can certainly see flat share as an alternative. Yes, it doesn't have the community. You're not with the rest of the students in the university, which is a big point, and the partying and the social aspect is quite important. I think more in student housing than in co-living, where it's having that privacy with ease of amenities and service at whenever you want it.
Thanks, Mariya. Pavlos, I know that NREP has a lot of operating platforms in all the various asset classes that it's active in. Is that a similar approach that you take at Hines? Are you more open to buying, acquiring, or investing in operating platforms as you go into new sectors, or would you launch them yourselves?
Our approach is we build organically our student housing platform in-house. Again, as mentioned earlier, from UK and Ireland now to Italy and Spain, and there are more countries and cities to come. This platform is also ready to operate the typical multifamily residential for rent, and as mentioned, to use the experiences from student, which is, as Mariya said, much more intense and much more social, and take these lessons learned and use them in residential for rent. So far we have been focusing on the organic growth of our in-house operating platform, which also started as a child of the US platform that we have. We started learning from them that they had longer history, and now this child has become a successful adult. And I would say that I've seen much more discussion about platforms and about how platforms can be tied with portfolios, about how platforms in specific cities and countries can be maybe the most efficient thing to do. But so far we have been focusing on our in-house operating platform.
Mm-hmm. Mariya, do the synergies which come about from having the OpCo and the PropCo in the same ownership, does that result in longer hold periods for your assets?
Indeed, that's our aim, and one of the reasons why we created an evergreen perpetual fund, which could hold the assets once they're stabilized. We talk a lot about platforms. We actually grew them organically in-house as well. We have quite a lot of people coming from not traditional real estate background, so from management consulting, where they're more used to setting up operating businesses and thinking about customers and how you do that. So we tend to attract also quite a lot of people from hospitality that can run these platforms. And we think that it informs our investment decisions as well. We always involve our operating platforms, even when we're buying standing assets for our income fund, to evaluate whether the rental levels are where they expect them to be, whether the product is good, and so it is actually quite helpful to have them, and it helps with also design and planning, and maybe gives us a competitive edge in acquiring and also during planning as well, because the local authorities know that we're there for the long term. We're not just a developer, which historically we've been similar to Hines, focused on developments. We've done that through opportunity funds, whilst I know Hines has done that with various capital sources. So we've had only one sort of set of opportunity funds that has invested in development. We have very strong local capabilities in development. But the operating platform is an interesting added layer, because it does give that sense of long-term view, and we do try to keep the management to ourselves, even when we sell, whether it's to a third-party investor. And I know Hines was on the wrong end of the stick there with a logistics portfolio we sold to AXA. Because we wanted to keep our logistics operator in asset managing the asset, even though we don't have the ownership. We haven't done that in living yet, because they're relatively new concepts. So we hope that we are either able to retain management and ownership through our evergreen perpetual fund, or even if we have to sell the certain assets to retain the management, because we're ultimately the best managers, given that we've created that concept and know the building so well, that we'll extract the most value out of it going forward as well.
I fully agree on how strategic having the in-house operating platform is. From the early stages of designing for a development project. And I mentioned, I think earlier, the alignment of interest between investment, development, and operations. If this is a real value add aspect, and of course, same applies for as Mariya said, for a core asset. The having all the knowledge and all the information from the operator as one team, and having one same goal. I think it's really strategic and creating a tremendous amount of value.
Mm-hmm. Mariya, as a general rule of thumb, do you think hold periods of assets in the living class, how would they compare with other sectors such as logistics, office, retail, and so on? Are they because they are where people live, obviously, to simplify as much as we can, does that lend itself to a longer hold?
I think historically the pension funds and insurance companies were the owners of residential properties of traditional built to rent. Let's say in Germany and Netherlands are some of the most established markets in Europe, and they have very long-term views. I don't think it's an asset class differentiation. I think it's more who has owned and what kind of ownership they have. I think you see quite a lot more, for example, private equity firms maybe buying residential portfolios, looking for rental growth, for refurbishing and upgrading that. So I think it really depends on your source of capital rather than maybe the asset class per se. But most likely, yes, their useful life tends to be longer than let's say office building that needs refurbishment probably every 10 years or so, whilst the residential building you can do light touch retrofits on an ongoing basis, but it is a longer lifespan in that sense.
Pavlos, I want to talk briefly about the build to rent market. We've talked a bit about the demands of the customer in student accommodation and co-living properties. How have things settled down, if you like, in the build to rent market? Because we saw here in the UK, where it's a relatively new concept, because we've been completely obsessed with home ownership until fairly recently, that build to rent developers and operators really wanted to make a splash, and there was almost like an arms race of amenities in the buildings, and a lot of them, I think, were completely over-specced, and some of the amenities and facilities that went in just weren't getting used. Have we got to a stage now where it's better understood, and there's an accepted level of specification for each particular market?
Yes and no. I think if we say that something is stable and not dynamic, I think we will just do a different type of mistake in 2 or 5 years time. As what actually happened was, as we discussed earlier, there is an evolution of the sector. I don't feel that the sector will stay as it is today in the next 10 years. And as the technology evolves, and as lifestyle evolves, then we will have different needs. So the word flexibility is something that is sometimes challenging to achieve, but is always good to look at it from different angles. Overspecking means sometimes, being a little bit too optimistic about how people live their lives, and we need to be realistic. And if we're thinking in this in combination with affordability, and with, as Mariya described earlier, about asking our tenants and asking the cities and people, what do they really want? Not what their wish list is, but what are they going to be using on a more regular basis, because every amenity is a cost, and we do not want to have costs passed to the tenants for things that they're not using. We do not want any unnecessary luxury. So I understand what you're saying, but every market and every city is a little bit different and on different stages. We cannot say that Milan, for example, is at the same stage as London. We haven't seen in Milan this journey of residential for rent with overspecking. It's too early in this market. Or we have seen some other markets that are much more sensitive on pricing. I feel that London or Greater London had much more room within this expensiveness to overspec, whereas in other markets there is much more sensitivity.
Yeah,
I think the right way moving forward is to be really specific on a case-by-case basis, and not to generalize, depending on the location, on the target tenant, on the scale. You cannot do the same amenities if you have 5,000 square meters or 20,000 square meters. It's impossible to just say, okay, I will do the same thing 4 times larger. So it's definitely on a case-by-case basis about the product definition.
Thanks, Pavlos. We've actually come to the end of our hour. It's flown by, and there's loads more that we could have spoken about. It's been a fascinating conversation. Just before we wrap up, I'm just going to show a couple of quick slides, and then when I've done that, we're going to leave the session open for a couple of minutes, because there's quite a bit of information in the chat. So if anybody wants to take some notes and write some of that down, you can, including some links from Matthew, who asked the question earlier. So thanks for that, Matthew. The next Urban Living webinar is on May the 4th, and it's about the role of the metaverse in hospitality and real estate. That's a fascinating topic. I actually sat in on a session about that at MIPIM a few weeks back and learned quite a bit, so I'm looking forward to that one. The link for that is in the chat, and you can also use the QR code on the screen. I mentioned earlier that we're launching a new website this week. It's called Urban Living News. The web address is urbanliving.news. And it's focusing up on a lot of the subjects that we've been talking about today: converging asset classes, and the wider living markets. So if you are involved in any of those sectors and you'd like us to tell your story and get your news out there, please do drop me a line, and my email address is on the slide there. If you're interested in sponsoring any of our events or webinars, please do get in touch with Katie. You can see her details on the screen and also in the chat. And lastly, thanks for watching. I hope you enjoyed the session. It was really fascinating. There was a lot to get through and we could have got through more, but thanks ever so much to Pavlos and Mariya. I think they were fantastic and shared some really interesting knowledge today. If you're on any of the social channels you can see on there, give us a follow. Hopefully see you on the next webinar and enjoy the rest of your days. Thanks very much, everyone.